Good morning, everybody, and this is your S&P 500 day trade setups for today. So 4,400 has definitely been the level to watch, and you can see we rejected it pretty strongly on the 8-hour, tried a second 8-hour bar, and then this morning we've kind of just, I won't say free fall, but pulled back quite dramatically. Now, you've got a couple of things going on. So there is a nuclear plant on fire in the Ukraine at the moment, and then you have non-farm payrolls. So you've got so many things happening in the world right now, which could influence us. And as far as I'm concerned, the two levels that we have drawn in right now are the areas of the range that we are looking to build right now, and that is between 4,400 and 42.79. Probably be able to just drop that a little bit lower to 42.63, but somewhere in that area. If you look to the left, you'll see that kind of where price action is at the moment. So dropping down through the time frames, and you can see from the 3-hour perspective this week we have had a moving average crossover, which is interesting. We did get a grouping yesterday to the upside, and now we've pulled back to the downside. So there's no real structure in between. You can see there's no fractals in the week here except at the top and at the bottom. So that's kind of the two levels. The only other area that we could be paying attention to is kind of the open of the previous week, which is right here, and you can see that's kind of what we rejected. If we start drilling down to the time frames we want to be trading, nothing has changed this week. Above and below the moving average is not something that you want to be trading. Remember, I said to you 2 days ago, when the moving averages start coming together like this, you're expecting something, and that sort of happened, kind of, and then basically we got the rejection yesterday. I had a few attempts, 1, 2, 3 attempts to break through 4,400 and failed. So at the moment, range bound, and we've got non-farm payrolls today, so I wouldn't even bother with anything until after non-farm payrolls. You might get some kind of a squirt, but then I think you're probably going to settle back into the range as we watch the events unfold in the Ukraine at the moment. So 15-minute, just want to see, if you look at the 15-minute chart, was there an opportunity yesterday? Everything was indicating uptrend. And you can see above and then below and then above and then below going into the close. So nothing really exciting at the moment. So what I would anticipate is something like this. I just want to see what we have on the hour. It'll be the same on the hour. So we're looking for a pullback into this area of 43, 47, 43.50 for another move to the bottom of the range. That's kind of the only trade that I can see at the moment, but based on the volatility of yesterday, I would expect us to be just as volatile today, and probably throw us all over the place again. So nothing clear cut. I think for me it's sit quietly, sit on my hands, and just wait for non-farm payrolls. There might be some scalping opportunities after non-farm payrolls. Definitely at the bottom of the range is some opportunities to buy, but you just need to wait for the price action. And there's definitely some opportunities to also sell off this area here at 43, 47. And last things to take note of is that trend line on the 15-minute. It is there on the hour as well. There's 3 fractals on the hour, so that is kind of the trend line that we have at the moment. So pull back into this space, another pullback to the bottom of the range, but stay out of this. Don't try and ride it through non-farm payrolls, because it wouldn't surprise me to see non-farm payrolls indicating that the economy is all wonderful again and everything's rosy, and the buyers step in a buying frenzy for a while, and then all of a sudden realize there's a war going on and then start selling off. So pure range trade, I think, at the moment. Anyway, that's it for me. Hope it helps, and we'll catch up with you next week. Cheers for now.